Hey everybody, it's Pete. Good morning. How you doing? Hope you're having an awesome day. I don't know where you are right now, but we are having some pretty nasty rain in Florida overnight and into the morning. Hope everybody's staying safe. If you could just do me a quick favor, just click down into the chat, confirm that the audio and the visual is good, and we'll kick it off right away. We're going to talk about this book. A little tease there. And we'll get into the market action today. A lot to talk about. We're going to talk about types of traders. What type of trader are you? That kind of stuff. Hey, let's see. I want to say hello to everybody this morning. Jason Miller, what's up, man? How's it going? We miss you, pal. Hope everything is good. John Bates, good morning, pal. As always. James Daniel, good morning. Ruby, good morning. Good morning. Guy, how are you, pal? All right, Rad Rat, that's a cool name. Trade 90X. I don't know if you did you invent P90X, because that's a huge business. Let's see, Milky Fade, you're here first thing every morning. Love it. Petrol Head Guru. I asked you this the other day. Do you trade oil? I hope you do. Let's see, John Oakes. Okay, all right, we're going to get started. Obviously, really appreciate everybody being here with me today. Oh, just at the beginning, we just want to make sure we get this in. Hang on just 1 second. Okay, so obviously with everything we do, everything we're talking about is for educational purposes. It's my mission to make trading 10 times easier for you, both through these YouTube videos as well as in our private community. So if you find this stuff helpful, absolutely click down, smash that like button, subscribe so you get alerts for the next ones that are coming out. Ultimately, the final decision is yours, but it's my mission to make those decisions super easy for you. So what we're going to do now is first, we're going to talk a little bit about what's going on in the big picture in the market right now. Look, we had a lot of conversations the last month, and let's actually pull this up on the screen because we can actually get a better picture here. So this is actually what happened in the market yesterday. There was so much going on in the market yesterday, and I think a lot of that chaos is from Powell speaking, as well as the unfortunate incident that happened in Afghanistan yesterday in Kabul. So prayers go out to all the Americans over there and the other people. But we're here to talk about trading. So everything that we're looking at right now, this is yesterday's performance in the market. You can see that it was a sea of chaos, for lack of a better way of putting it. However, what I want to talk about is a little bit of a bigger picture, which is the last week of trading. So you can see that it's a little bit different picture. And there's actually two things that are super interesting on here. Number one is tech stocks. Tech stocks and financial stocks have still been dominating. Apple, nothing really. Apple's been in a trading range for a while. Hey, Catherine, good morning. I love your comments, Catherine. Keep them coming. But what I want to talk about is this here and this section right over here, healthcare stocks. What's super interesting is that we have had FDA approvals come out on some of these stocks, and these stocks have been going down since the FDA approval or kind of doing nothing. Today, heading into Friday, I'm actually setting up ideas where I'm looking for these stocks that were really strong over this little bit bigger period of time, last few months, have now pulled back or paused or consolidated. We're actually going to take a look at Tesla today too, looking to set up bigger pictures. But what I want to talk about, looking at this picture, and then looking at this picture here in the market, and let me actually bring that over a little bit so it's a little bit easier to see. There's been massive conversations about tapering, which obviously we're going to talk about here with Jerome Powell, which his speech, I believe, is set at 10 o'clock today, if I'm not mistaken. Yeah, I believe it's 10 o'clock today. So make sure that if you're day trading, you have your stop losses in, or you're aware that that's going to happen. The volume is probably going to dry up a little bit and get a little bit chaotic. But what I want to talk about and specifically talk about is this. There's been so many conversations about being fearful the market's going to turn around. And it really comes down to absolutely knowing what time frame you're trading. But more importantly, don't be afraid. There's no other way to put it. As long as you have a written plan, and even if it's not written, but by the way, it should be written, as long as you have a plan. You know what? I'm actually going to give you a link. I didn't plan on doing this, but this is kind of cool. I'm going to post this into the community. Give me just 1 second. You'll be happy that I did. Let me go over here to start here. And I'm going to bring this in actually. You can see here on our website, let me actually just make this a little bit bigger. It's Stock Trading for Beginners. I'm going to post this link in here and you can take a look at that. But the big thing I want to talk about is this, how to craft a winning trading plan. If you go to this page over here, you'll see that it's a complete outline on creating a trading plan. Now, the reason I bring that up, it also has links in here for trading journals and stuff. The reason I bring this up is very critical, is that as the market has continued to grind higher, and we'll actually use the SPY here, we've had a ton of questions about, is the market going to reverse? Should I be afraid? Should I be getting out of my positions? And really it comes down to, you need a way to determine if the market reverses. So there's a trend, there's a potential change of trend, and then there's a reversal. It's that window in between where there is an uptrend, you break the uptrend, but you don't continue to the downside. So as of right now, hey, Pam Hicks, how's it going? I love seeing everybody in here. This is awesome. Thank you, Pam. The point that I want to get across here is, and it actually has to do with this book as well. You need to know what type of trader you are. And what I mean by that is I'm just gonna keep it as simple as possible because it's one of the biggest things that we do. Are you a momentum trader or a trend trader? These are two big things. You need to know prior to placing trades what type of trader you are. And I want to explain the difference between the two because it's critical in how you manage risk, how you take profits, what type of profits you take, and when you determine if a stock is reversing or heading to the downside. And again, we're going to talk about that in this book in just a second. So momentum traders, and we're going to actually, if you just logged in, we actually talked already about looking at the healthcare stocks bouncing. We've talked about the bigger picture, and actually the top of the list, let's actually give a list of stocks. The top of the list of the healthcare stocks that we're going to be watching, we're watching J&J today after this pullback. So actually big rally pullback into support. We're going to be watching Pfizer today and UNH today. So I just wanted to get those out. We've got a couple of comments and people say, oh, you take too long to get to those trades. All right, there they are. We're also going to be taking a look at Tesla today. And as you can see here, Tesla in a much bigger window keeps getting tighter and tighter and tighter. And generally speaking, from this type of price action, you get bigger moves. One of the first types of big lessons that I actually got, I don't know if everybody's ever heard of the trader Larry Williams. He's really, really famous, famous trader from way back. I think he started trading in the late 60s, but became famous for making turning $10,000 into 1.1 million in 12 months. He actually ended up losing it the following year after that because the market changed. But the strategy or the concept that he taught, which was absolutely brilliant, is that there's only two types of price action that you need to be aware of. And once you understand these two types of price action, everything changes on the chart. So when we're looking at this and we're looking at Tesla like that, the two types of price action are consolidations and expansion and volatility. So one always leads to the other. So if you have an expansion in volatility, you can narrow your risk down and find better opportunities because that expansion leads to a contraction, and then that contraction leads to an expansion. If you think about it, let's say that you are a hedge fund. Let's pick somebody. Let's say Shane. Let's say Shane Eaton owns a hedge fund and needs to buy 10 million shares of stock. Shane starts buying the stock. It starts to go up. And then Shane is like, all right, I don't want to keep pushing this thing up on myself. I'm going to stop for about 2 or 3 days, let the stock breathe a little bit, see if I can get a better price. So that expansion of Shane buying, and it doesn't matter who it doesn't matter, but in this case, Shane has a lot of money, and then it consolidates. It's during those consolidations that you anticipate that is going to continue. And again, we're going to talk about momentum versus trend trading. And then you enter on that pause. So you hear us talk a lot about a push and a pause, a push and a pause. A push and a pause is us waiting for that pause to narrow risk and get a good entry, looking for the next expansion. So if we look at Tesla here, that's exactly what's happening in Tesla. Tesla expanded the volatility. It's contracting, contracting, contracting. And now we're looking for a big move out of that. It's probably one of the simplest ways to analyze price charts because you don't need to use any indicators. You're really just looking at what's going on in price now? Which phase are we in? Are we in the expansion phase? Okay, wait for it to contract. When it contracts, then we look for another expansion. And actually, ironically, I just gave you one of those setups. If we look at Pfizer, Pfizer has actually pushed down into one of the tightest contractions that you can get, which is yesterday's price action on Thursday is completely, let me actually zoom that out a little bit. And you can see we actually have a black dot there, is completely inside the previous day's price action. So once you have some volatility pulling back into consolidation, now in Pfizer, we're looking for an expansion, which is this. So if we could look right over here at Pfizer, where we had 1 day of contraction after this move to the upside, a second day of contraction, and then we went and did that over the next 3 days. So again, 3 days, depending on what time you're trading, but that's what we're looking at in Pfizer right now. So whether it's this much shorter time frame in Pfizer where we contracted and we're looking for expansion, or this much bigger trade in Tesla where it had all of this expansion and it just keeps getting tighter and tighter and tighter. And by the way, it keeps holding the support level. The next move in Tesla coming out of this contraction should be a big one. Now, whether it's to the upside or the downside, right now, what I'm watching for is Tesla between 700 and 725. Those are the two levels. I'm not trading in between because I don't want to. That is the right price on Tesla right now. So until we get out of this window with what we call fuel or energy candlesticks, which are large green candlesticks that close above that level and stay there with volume, then I'll look to hop on board for that much bigger move. I just want to make sure I say hello to everybody here today. Tom Gillette, good morning. Thanks so much for joining us today. Spencer Shirk, love the Captain America. I got a bunch of comic books on the back there. I love that. We're big Marvel fans. Actually, I'm a big Marvel fan. My wife is a DC fan, but we watch them both anyway. Peter Pye Morgan. All right, good morning from England. Thanks so much for joining us. I got to tell you, that's one of the most amazing things in the world that we could be talking to people all over the world right now. So anyway, what I want to get back into is this. We talked about momentum trader. We talked about trend trader. You need to choose what type of trader you are in order to trade with absolute positive conviction. And that means that you need to know, are you looking for bigger moves in exchange? Yeah, let me actually come back to the screen here for a second. When we talk about trend trading versus momentum trading, momentum trading is basically what swing trading is, where you're looking for the next move. And the first time that move starts to show a little bit of weakness, you're out. So a push and a pause and you're out. Trend trading is a push and a pause, and you're looking for a bigger move, and you're looking to add to that. They both have pluses and minuses. So if we pull this back up on the screen and we discuss the two, the thing with momentum trading is you are booking your profits sooner, and your drawdowns, moves against you, will be much tighter. The con or the negative to that is you're not experiencing the much bigger moves, because as soon as it goes up and slows down a little bit, then you're out and you're looking for the next trade and you're looking to put your money to work. So that's the pro and the con of momentum trading. Now you need to think about what kind of trader you want to be. A trend trader is a little bit different. A trend trader is okay with allowing some unrealized profits to pull back in exchange for a much bigger move. So here's the best way that I can describe the biggest advantage of being a trend trader. So let's say, for argument's sake, you made 10 trades this month for the month of August, and 4 of those trades were flats. So that's the terminology of flat. It pushed up, pulled back, and you were up $500 on each of those trades, but it came back to 0. So you managed the risk. You were okay with unrealized profits pulling back. Then you have 3 other trades that were losses. So you had 7 trades. 4 of them made nothing. 3 of them were losses, were your acceptable losses. The trend trader is 100% okay with that, because the other 3 trades, I hope my math is right, the other 3 trades, you allowed them to fluctuate a little bit. They maybe unrealized profits pulled back a little bit, but then that bigger move took off again and you caught that next wave. So trend traders are okay, write this down, okay with giving back some unrealized profits in exchange for a much bigger move. So you're going to have a little bit more 0 trades, small losses in exchange for those bigger moves. I tend to trend trade a little bit more on these higher time frames where I'm looking for the next bigger move. On the day trading side, depending on the type of market, we're a little bit more of a momentum trader. So we'll kind of change the strategies around or adapt the strategies to the type of price action. So what you need to do now is really think about, do you want to get involved in a trade, see it push up and pause and then get out, or push up, pause, add more shares looking for the next move. Neither one of them is right. What is right is building one of those strategies to your particular personality. So I just want to walk through this very quickly. So if we take a look at the Tesla chart and we look at this as a momentum trade right here, which this is a pretty easy one. So you see that momentum here where we had what we call a well bid candlestick, then another well bid candlestick, then another well bid candlestick. And then look at that. Out of nowhere, we got that contraction in volatility, which is a little bit of a pause. So at that point here, from 650 up to 720, you're not looking for the next big move to the upside. You're like, oh, it's slowing down a little bit. I'm done. Now, if you bought this stock down here during this pause and you saw the thing rally to the upside and pause over here, this is where, if you're a trend trader, you're looking to add here. Your stop loss is still down here, which you can see the trade is still valid, and you're looking for the next move up. So you're okay with this initial profit pulling back, still holding above your entry price in exchange for the next big move to the upside. Again, I want to point this out. I want to make this something that you really dive into, or take the time to teach yourself over the weekend. Click onto this page. I just posted it in the link over here. Go to this page and get the trading plan template. You can see on the trade, we actually have a couple of videos on here as well about, excuse me, building your trading strategy and that whatnot. And you can see it's really step by step. Really think about it, because I want to say this. I want to say this as accurately as possible. Trading is only hard when you don't know what you're going to do next. Let that sink in for a second. And I promise you that, and I don't make that many promises because this, we're highly regulated here. I will promise you this: trading is a lot easier when you know exactly what you're going to do. And that's where a trading plan comes into play. So definitely go to this page. I'll post this in here again in case you just happen to come in a little bit later. Take a look at that and start making your own trading plan. All right. I just want to make sure I say hello to everybody here. Armando, good morning, pal. How's it going? Armando helps us out a lot in the community. Rika, good morning. Let's see, Catherine, trying to figure out when to add to a position. Okay, yeah, that's awesome, right? And look, I mean, that's the exciting part. We get in here, we ask questions, we go back and forth, and sometimes one little light bulb can turn it around. I want to add to that for a second, because this is actually a pretty good question that Catherine's asking here, or actually a good point bringing up. You need to determine, like, what's kind of funny too is we all know our stop loss, right? You put on a trade, you're like, that sucker gets down, I'm out, right? But what about when it moves in your favor? What is the system that you have for when you enter a trade and everything works out, starts to move up, and where do you put on more shares? I'm actually going to give you a little bit of a inside. I'm going to take you a little bit behind the curtain of what we do in our private community. If you want to learn more about it, you can click the link below the video in the description. But let's say that we go over here and we go to the heat map, right? So let's say, for argument's sake, we talk about, let's use a stock. Let's use Pfizer, because Pfizer is actually the one that we're going to be talking about today with our entries, right? So if you go into finviz.com and you take a look at Pfizer. So we're going to address Catherine's question here, or Catherine's point, actually, which is understanding when to add to a position. But I want to say this: one of the most important things you could do by a mile is to make sure that if you bought here and you're looking to add here, the second entry up here as it moves in your favor should be less shares than the one down here, because you always want to be adding less shares, because if this pulls back, you don't want a top heavy trade where you're losing more on this trade than this one. You want to have the most shares at the best price. So down here is your first entry, more shares. I'll just use round numbers. Let's say this is 600 shares and up here becomes 300 shares, just to keep it simple. But here's the thing that I want to point out. If we go to finviz.com and we just typed in Pfizer as an example, over here is the ATR of the stock, which is called the average true range. And in this case here, Pfizer is $1.39. And just to give you an example of how average true ranges can fluctuate, if we look at Tesla, the average true range in Tesla is 2206. So what is the average true range? What is this actually telling us? Average true range is what the stock normally does from low to high over a certain amount of periods of time. So it's telling us from low to high, typically over 14 days. That's what the stock normally does. So what's awesome about using average true range and factoring that into when you would add to a good position, or quite honestly, you could use it for a stop loss. If you know anything about the turtle traders, that was actually a big part of their strategy. If you want to look that up, turtle traders is a pretty fascinating group of traders. What they essentially did, and what a lot of good traders do, is they will take the ATR of the stock. So in this case here, let's say Pfizer is, let me zoom, actually stay there. Pfizer is $1.97. So let's just say, for argument's sake, $2 to keep it simple. And Pfizer yesterday, Tesla. We'll use Tesla as an example. You know what? Let's use Pfizer because it's more realistic. It's not a $700 stock. $1.39. So let's say $1.40 just to keep the numbers simple. And let's say that you buy Pfizer at $48. Just keeping the math really simple. So the average true range in Pfizer is $1.40. And let's say you buy at 48. So 48 plus $1.40, that's one time what the stock normally does. Now, what I teach is you don't want one day of price action to go up and be able to pull back and stop you out. You normally want a couple of days of price action, at least positive price action that moves in your favor before you add more shares. So there's the subjective way of doing it, of saying, okay, the first push and pause, that's where I'm going to add. Or you could make it, you could remove all the subjectivity and make it exact, like an algorithm. Have your own mental algorithm and say, okay, if Pfizer's average true range is $1.40, I want to wait until it moves at least 2 times or 3 times, whatever that number is. So you go in and get the $1.40, you multiply that times 3, which is 520. Quick math in my head there. Every trader is good with quick math. So if you buy here and 3 times the average true range, which again, that's a number based on every single stock, that is a mathematical way of saying I know exactly how many shares, which we just discussed, and also when to add. That's really the big piece, is when do I add more shares? So then you look for the next move to the upside. Now, if you're a momentum trader, you probably wouldn't do that because you're just using the candles, as we said before, to look for that expansion and then contraction. But that is the big thing. So if you don't, actually, you know, it is pretty cool. If you go to our homepage on YouTube and click on the top, we actually have a 25 or 30-minute video on actually how to use the FinViz scanner. It's, in my opinion, I use it every day. It's one of the easiest scanners. You can build a whole bunch of personal scanners, that kind of thing. There's a free version and a paid version. If you sign up for the free version, you can do everything you can. The difference between the two is no ads and real-time quotes if you get the paid version. And quite honestly, and I'm not getting a commission here, the paid version for only $35 a month or something like that, if you're actively trading. If you're not actively trading, you don't need the paid version. It's really, really cool. So anyway, that's what I wanted to touch on that. What I do want to talk about is we had a bunch of questions yesterday in reference to, let me see, Stephen, wouldn't it depend on the stock? Yeah, that's exactly the point. That's exactly the point, Steve. If we go back into those 2 stocks, Pfizer has a $1.39 average true range, and Tesla has a $22 average true range. So that's literally the point of why using average true range is the perfect way of doing it, in my opinion, because each individual stock gives you the right number for that stock. So Pfizer has a dramatically different number from Tesla. So each stock's average true range is unique to itself and unique to its own most recent volatility. So you're actually using the numbers of that individual stock. So Stephen's point, 100%, that's actually the whole point. It's different for every stock, and each stock is giving you its own individual number. So it's really, really cool. But what I want to talk about here, I want to talk about this book. I want to talk about Reminiscences of a Stock Operator. Let's actually get back to Stephen's question. I was referring to the type of trade, momentum versus trend. No, it doesn't matter which stock, because the stock has its own volatility. If a stock doesn't have volatility, obviously you're not going to trade it. So you as a trader are going to know which stocks you're trading. If you have deemed yourself as a momentum trader, again, getting back to what we just talked about, the building a trading plan, if you are identifying yourself as a momentum trader, you can't trade a stock that doesn't move. You have to only trade stocks. So your style of trading will dictate which stocks you look at. So you're kind of right, but it's really out of context. I hope that makes sense. Okay. So anyway, I want to get back on track. I want to talk about this book. If you have not read this book, Reminiscences of a Stock Operator, and I'm kind of bringing this in on the weekend because a lot of us like to spend the weekend becoming better. If you can see, I've actually highlighted the heck out of this book. That this book was written, I believe, in 1937, if I'm not mistaken. If you don't know the author, his name is Edwin Lefèvre or Lefèvre. Hold it up there so you can see it. If you love the markets, if you are fascinated by understanding how to become a better trader, this book is by far, nothing comes even close, by far the #1 book on getting into the mindset of trader, going through the fears, the ups, the downs, all of that kind of stuff, and then eventually coming out on the other side. This is basically written, it's a ghost-written book about Jesse Livermore. If you don't know who Jesse Livermore is, he was one of the, if not the top trader of the early 1900s to, let's say, 1920s, in that time period. He was so influential in the market that JP Morgan actually had to ask him to stop short selling the market, and I believe it was 1908. He just absolutely crushed the market. Unfortunately, if you read the story a little bit deeper, his life actually ended tragically. But we're here to talk about trading and talk about what was fascinating. And there's two big things that I'm going to give you kind of like the heads up about on this book. #1 is a big part of the book is him discussing what he did wrong, and then finally getting to the point where he talks about when he finally stopped doing what didn't work, instantly he started making more money because he eliminated what didn't work. The second part is he never caught tops and bottoms. He always looked for what was called the line of least resistance. At least that's the terminology. We call that an obvious trend. And I want to bring up a final point about that. The way we do things in our community is we only look for order flow. We only look for obvious smart money buying where it's already there and we just piggyback, and it couldn't be any easier. You could actually learn how to do it. You could learn what we look at very quickly, but then the time we spend together is learning how to be a trader. There's a big difference between understanding what to look at and learning how to be a trader. If you want to learn about what we look at, again, just click the link in the description. But here's the point that I want to make. He found it infinitely easier by doing two things: making a big list of what doesn't work and stopping that. And #2 is only trading when it was obvious, which brings me up to a big stock from yesterday that I want to talk about. And it's this stock. Let me go over to the charts. And it was this one. Okay, a lot of people were talking about Sava the other day. The news came out. You can see the stock has just been absolutely, positively explosive, for lack of a better way of putting it, in both directions, right? We got a question yesterday here, as well as in our private community yesterday, about buying the stock on the close on Wednesday prior to yesterday, prior to Thursday opening up. And the stock just got crushed on Wednesday. People said, oh, I want to buy this dip. I want to buy it all the way to the downside. And it was super, super clear. I'm not joining you. If anybody would do it, I would do it with options. And even that might not have been the best idea because the volatility and the premiums are probably expanded to the moon. That is hard money. That is fighting order flow instead of finding it and piggybacking it. So if, in case you weren't aware, this line here was basically, we're talking about the $80 level where it was being questioned. And then this is what actually happened in the stock yesterday. The stock imploded. Yes, the market imploded, but so did the stock. There's no reason in the world to make these trades that are very, very wrong. I honestly don't know if there's an easier way to say it. I mean, there are opportunities where price action comes in. You know what? Wrong is not the right word. Difficult. Raise your hand if you would rather make the easy trade or the difficult trade. That trade is the difficult trade. The way that you sleep at night as a trader, the way that when the market opens, you absolutely positively expect to make money, is because you know what you're looking at, and you're just looking to piggyback on the back of somebody who's got deep pockets and could move the market. The people that move the market up and down, you just want to find when they're buying and piggyback on their side. Fighting what they're doing or guessing when a stock is going to stop is very difficult trading. make life easier for yourself, start trading with the smart money, and then learn how to make more on those ideas. I just can't stress this enough. And this is a passionate topic for me, because when I first started trading, I didn't know that. And I was kind of all over the place. I was trying to catch every move to the upside and the downside. The bottom line is this: once you spot order flow, the only thing you need to do is sit there and look for good entry prices. And then the next part after that is understanding how to make more on your winning trades. So I can't stress this enough. We get a lot of feedback from people in our community that it feels like every single time you place a trade, it moves against you. I mean, raise your hand. I've been in there early in my career, and I don't know any other way to say this, that once you finally have a structure, like Jesse Livermore in this book, he calls it having structure, which he calls the line of least resistance, and start moving in that direction. I call it order flow. And just a quick, lesson. When I had my trading firm in New York City, we had 300 people trading my money. But in 2007, there was a big change in the New York Stock Exchange, where they went from a specialist system where they were doing everything physically. And you can see I got a big picture of the exchange up there. It became all electronic, and it became a hybrid system, and it was mostly electronic at that point, which is the system we have today. 25 of those people came to trade on my floor in New York City. Our office was on 34th Street and 7th Avenue in New York. It was called Keystone Trading Group, if you want to look it up. What we learned from them about order flow and how smart money pushes those stocks up or down, and they do it over days, weeks, and months, and you learn what to spot. And then we taught them how to trade from a computer, because we were mostly NASDAQ traders at that point. That was ultimately what became known as the New York method. It was my NASDAQ trading and their New York Stock Exchange order flow. It became something really special. But that story's nice, but what does that mean to you? I am telling you here, as somebody who's trading for 21 years, there's a hard way to trade, which is having no structure, and an easy way to trade, which is knowing exactly what you need to look for. And here's the big thing. If you can't say this, you don't have a strategy. I'm going to tell you right now. If you never say, I don't see anything good, then you don't have a strategy. I can't say that any more clearly. There has to be a certain amount of time when you're looking at the market and saying, wow, the charts are a mess right now. I don't see anything obvious. There's nothing I can look at right now and say, man, I can't wait to buy because it's obvious. If there's never a time that you can say, wow, it's hard to find something great right now, you don't have a strategy yet. So it excites me, and we talk about it in our community. When somebody says to me, am I seeing it right? I don't see anything awesome. I get all lit up. I get excited, because that means that person, that man or woman, which we have a lot of both in our community, that means that trader knows what they're looking for. And I'm going to leave you with this, because we actually have to hop over into our private community game plan session. If it's hard to find, it's not there. Which, again, getting into the Jesse Livermore book, he finally started to make big money when he was very specific about what he was looking for, which was that line of least resistance becoming obvious, which we know is obvious order flow. So I'm going to challenge you from now, Friday through, let's say, next week or whatever it happens to be, start to write down what exactly price action needs to look like before you put your hard-earned money in the market. And I challenge you to stop trading if it's not obvious. That second part is actually harder than the first part, because the market opens, we all feel like we want to do something. We're reading all this stuff online every day, and you feel like you need to do something because the market's open. That's not good trading. Good trading is when your edge is there and you build the argument for, yeah, you know what? I'm going to put my money at risk because this is a really great idea and I expect it to move in that direction. It doesn't happen all the time, but at least it's a good idea. So you need to make the decision now. Do you want to trade the hard way, or do you want to trade the easy way? The easy way is following the order flow because it's already going in that direction. You're just finding a spot to hop on board. All right. So I'm going to actually call it a meeting, everybody. I want to thank you so much for being here with me today. I have to hop over to our private calls, but starting a little bit. If you want to learn about our private calls, click the link below in the description. Look, I'd love to see you on the other side. It's basically a 30-day seminar where you get everything from me, including coaching and my entries and exits on day trades and swing trades. If not, I'm 100% okay with that. I'd love to see you invest in yourself, but if you want to stick here with me on the YouTube channel, I'd absolutely love it. I want you to know how much I appreciate that you're here with me today, because I love giving back, because let's face it, trading can mess with your mind and it can be challenging. So if I'm helping you, definitely smash that like button. If you find these videos helpful, subscribe and hit the alert button so that you get updates. All right. Have an awesome, awesome weekend, everybody. And let's have a great day. Remember, Jerome Powell speaking today at 10 o'clock, I believe it is. Look up the exact time, but I'm pretty sure it's 10. Have an awesome day, everybody. Take care now.